Today's Animal Spirits is brought to you by Birddogs. Michael, I'm on vacation right now, and
Not to brag.
I've not to brag, I've been wearing bird dogs the entire time. Now here's the great part about bird. I've been wearing bird dogs for years. Here's the best part of them. One, they have a liner. It's beautiful. No underwear, no boxers. The bird dogs themselves act as the shorts with the liner. They act as your own underwear. Two, this is probably their best invention they have, and I don't know why other people haven't copied them. They have the side pocket for your wallet. I hate sitting on a wallet, but I want to have my wallet with me. And the other thing is it's a zipper, right? So if I'm on the go, I'm jumping in and out of the water. I don't carry cash. I'm a credit card guy. I can have my wallet right there. It doesn't matter, right? Never lose your wallet.
Wait,
It's on the side.
you take your wallet in the water? That's a stretch.
It's happened before. I'm just saying, if it happens on accident, I jump in, one of the kids pushes me in the pool. It's okay. It's safe. It's zipped in there. It's not an open pocket. Number three, have you tried the pants before?
Of course. I've got the joggers.
Yes,
the joggers? They're joggers, yeah.
I'm a new convert to the joggers. I've always worn the shorts. I wear the shorts all summer, all vacation, but I'm a new convert to the joggers. And I wore them to one of my daughter's basketball games a couple weeks ago. Someone said, "Where'd you get those pants from?" I said, "Oh, these are bird dogs. Also have the liner. They're wonderful."
Ben, I have a question for you, being the bird dog aficionado that you are. I've got, I think, 2 pairs of shorts. Need to get some more for the summer. It's right around the corner, as you know. Actually, it's the first warmish spring day in New York. Finally, we're thawing out here. Is there options for different seams? Because I like, you converted to me. I'm like a just slightly above the knee guy, but I don't want to show too much thigh. But there are people that want to show thigh. So there are options for...
I think they have, they have the 10-inch long ones or the 7-inch shorter ones. I prefer the shorter ones.
You show thigh.
I don't mind showing a little thigh.
I mean, you were a running back in college, so I get it.
I don't skip leg day, so it's yes, I still show a little bit. If you do wear your clothes a little baggier, you can do the longer ones. They're 9 or 10 inches, so yes.
Well, yeah, I've got a dad, but
yeah.
Check out the link in the description and use promo code SPIRITS to get a free tumbler with your purchase. But that was a long little ad read. I'm not surprised you were jazzed up about this, fashion guy.
I'm in vacation mode, Michael. I've got nothing else to talk about.
All right, a little housekeeping before we get the show started. We are hiring a tax associate here at Ritholtz Wealth Management, and we're a little sensitive to the geography, preferably in the Northeast. We'd love Philadelphia. We'd also take Chicago, which I know is not in the Northeast. Just trying to cast a net, wide but focused. Wide and focused.
We're discriminating against the West Coast. Is that what you're saying? Pretty much.
So email us hiring@Ritholtz Wealth if you sound like this is a job for you.
Get to work with a great couple of guys there in the both of the bills.
Yeah, actually, we've got a Bill and Bill. So if your name's Bill, please don't bother. I think we're gonna cap it at 2 bills. All right, Ben, what are we talking about this week?
All right, from Bespoke, 5 stocks in the S&P are set to close Q1 with 50% plus gains. So NVIDIA, Facebook, Tesla, AMD. I pulled up on Y charts. They have the comp tables. So I pulled up the S&P 500 and I did year-to-date gains. And these are the top 10 stocks. I'm just going to name the tech stocks. NVIDIA, Facebook, Tesla. It's kind of funny, Warner Brothers is in there. Advanced Micro Devices, Salesforce. And then it's also funny that General Electric's in there. So 6 out of the 10, I think, are tech stocks. And I thought about this in the way, so last year, for the last 18 months coming into, this year, maybe going into fourth quarter of 2022, the resounding theme from everyone who wanted to sound smart in the markets was, don't try to catch a falling knife. But guess what? This is why you try to catch a falling knife, right? Because some of these stocks will see massive gains coming off the bottom. Obviously, we're not talking about the stocks that didn't have the huge bounces or stocks that are in. To be fair, a lot of these stocks are probably still in pretty massive drawdowns, but this is the reason that you try to catch a falling knife, right?
If you're going to catch a falling knife, make sure it's the right knife.
Right. So it bounces. I don't know.
I could give you 50 other knives that didn't bounce.
Right. But I'm saying this is why people try to play that game, though. It makes sense because they're going to get a huge bounce at some point.
Well, also, buy low, sell high. Ever heard of it? And I'm guilty of trying to catch way too many a falling knife in my day. But there are easier ways to make money. Let's just put it that way.
Right. But yeah, I think if you want to like play hero ball, this is the kind of thing where you can kind of try to because you tried to call the bottom in Facebook and you basically did.
No,
That makes
not
you
basically. Not basically. I literally was at the bottom.
okay. So you caught a falling knife, and that's a story. If Facebook would have just rolled over and it's up like 10% off the lows, you'd never be telling anyone. But because you bought it near the lows and you caught a falling knife, that's a great story. It's like a
Well, I'll also say Facebook is literally the only time I've ever done that. And if I still kept my journal, believe me, for every Facebook, there's probably 67 others
right.
that did not bounce.
But I just understand why people are so tempted to do this because they see these kind of returns and they go, next time this stock crashes, I'm going to get in. And of course, we're looking at these from an opportune time. We're not looking at them from the spot many people did buy, right? You bought at the bottom, so you say, and I haven't seen receipts yet. But so I'll give this analogy real quick. So I've never been a big fisher. Like I don't do fishing. I don't do golf. I don't do hunting. I understand why people do those.
You're an indoorsman.
I don't have, no, I like being outside, but I don't have enough patience for those kind of endeavors. My kids love to go fishing. And so we're at our place here on the water and there's fishing poles at the house we rented. And my kids
Did
have
you
been
just say
wanting
our
to fish.
place? Did you just buy a house in Marco Island without telling us?
No, the place we've rented, our Airbnb, it feels like ours. And so we've been fishing a lot lately. And I caught
Wait, just off the back,
Yeah,
is it like a dock?
there's a little dock. There's a little dock. And so we're put in and I caught a fish this morning. Now, when I'm telling that story, it's not like it wasn't a 10-inch fish. It was 19 inches, right? That's like you buying the bottom on Facebook. Yeah.
I really don't get the analogy.
I'm saying a lot of people would like, when they're telling these stock stories, they like to say that they bought at the exact bottom. I'm not saying you didn't. I'm saying
Do I? All right.
I believe you because you even said it on air when you did it. I'm just saying that's kind of stories you get with these. When you see a stock that's bounced a lot, you don't say like I bought it and then it fell 40% and then it rocketed up 80%. You say I bought it around the bottom.
I also think that most people equate a stock that is down 70% with being good value.
Yes.
Which is those are not the same thing. Those are not the same thing.
Or like a low price stock. Like this stock is $3 a share. It has to be a bargain.
My modus operandi, which is a phrase that I don't think I've ever used on the show, is that the market is generally right. Like most of the time. And if it's not right, I don't know when it's wrong. That being said, when stocks like Facebook are down 70% and Netflix is down 75%, I swing. Now you don't get an opportunity like that often.
No.
You know what I mean? It's not like I bought them when they were down 20%.
Which is basically what I tried to do. I bought stocks around 30% and then they crashed even more. That's kind of what happens.
Right. Well, I think that I have the benefit of listen, you're a CD guy. Your first trade was a CD. My first trade was a triple levered inverse financial ETF. So I've been burned way more times than you. I see 30%. Psh, talk to me when you're down 70.
The greatest thing about the CD story is it's got you off of target date funds and now you're onto CDs. So we've pushed target date funds aside and now we're onto CDs.
You know what's kind of nuts? Like the story of the year in 2023 so far, the investing story of the year is money market funds.
Yeah, that is kind of bizarre. I guess that kind of shows how boring markets have been this year, but yeah, you're right. What do we got here?
No, I'm just saying. It's just like the theme of 2022 is all about inflation. The theme of 2023 so far, it's money markets.
Well, how about this?
Crazy.
How about this for a theme? Remember when we just talked about tech? Remember when Europe and tech were the biggest basket cases, and these were the falling knives? So I pulled this up from Q4 because that's when these things really started taking off. Since the start of the fourth quarter, so that would be end of September 2022, the EFA, which is just the developed country international stocks, is up almost 30%. The Qs are up 21%, and the S&P is up 16%.
You're using the wrong index.
Not the
wrong index. Not the wrong index. But if you really want to hammer home the point of how crazy this is, look at FEZ, which is the Euro Stoxx 50. The Euro Stoxx 50, and I thought Europe was uninvestable. That's what I was told. FEZ, and listen, in fairness, it's been a horrible decade. FEZ is destroying the S&P.
Right. But that's the thing is like we were debating whether the US would go into recession. It was a foregone conclusion Europe would go into a recession. And I have to say that's because you're right. People were saying it's uninvestable. Why would you put your money in there when they are going into a recession? They don't have the tech sector. The whole country is just or not country. The whole continent is screwed. And
Guess what? You want me to blow your brain out?
let's do it.
FEZ, the Eurostox 50 in US dollar terms, is outperforming the S&P 500 over the last 3 years.
Wow. Okay. I wouldn't have guessed
Over
that.
the last 3 years.
So including the massive, wow. Okay.
How about that? Over the last year, the S&P 500 is down 7.5%. The Eurostox 50 is up 13%. Somebody explain to me how the Eurostox 50 in dollar terms is outperforming the S&P 500, our great index, our beloved index, by 20%.
Jeez.
I feel like nobody's talking about this.
No, it's true.
20%.
That's pretty. And what's the dollar in that time? Do you have the dollar? UUP, I think, is the ticker.
The dollar's got to be down. Dollars, actually, dollars, there was a big round trip. So the dollar's up 6%, although it's well off its highs.
But that's the thing. If
dollars at a 10% drawdown, so that's been a tailwind for sure.
I think
but even in local terms, I think the DAX is at an all-time high.
Yeah, I think it's even better in local terms. But the thing is, if
I thought they were going to be eating their feet. I thought that there was
that sounds like a Monty Python kind of thing. But if the dollar has basically been in a bull market since, I don't know, 2014, 2015, if the dollar goes into a period where it's lagging the other currencies for like this is not the beginning of it if the dollar is going to be weak for a while. Not that I'm a currency expert, but if that happened, you would expect that international stocks would continue to outperform.
All right, so there's a weird thing going on in the S&P 500 where Q1 2023 was the exact opposite of 2022, more or less, mirror images. There's a great chart from, and what I mean by that is this is the first quarter in terms of the stock market was all about large tech, mega cap tech.
It was last year was high quality, did really well, low quality
dividend payers,
Yes, the boring stuff did well last year.
Sentiment Trader, who I feel like haven't mentioned that name in a while, not sure why, has a great chart showing the percentage of S&P 500 members that are outperforming the index over a rolling 21-day period, which is I guess a month in terms of trading days. And
you're a trading day guy.
I'm a trading day guy. It is ludicrously low. Only 25% of members, which is basically about as low as it's been. Not basically. It got that low in 2000, in 1980. I mean, this is very rare. So I'm not saying that this is unsustainable or the market's being propped up. Well, I guess I am saying that, but I don't know what it means for forward returns. I just know that most of the index constituents, like if you look at the equal weight versus the mega cap are dominating. So
I put this as another feather in the cap of diversification. Last year, a bunch of other stuff helped the index, and this year it's this other stuff helping. Obviously, last year wasn't a great year, but last year could have been way, way worse. And because all those big mega cap tech stocks were getting crushed, and now...
Well, remember last year when all those stocks were down so much, Amazon, Microsoft, well, Microsoft didn't get killed that bad, but it was like the United Healths of the world that were saving the day.
So this is like a rotation play, kind of.
By the way, I have to say, that shirt pops hard. Wow.
Right? That's a Tropical... I'm working on the tan still. So this is a Tropical Brothers shirt, and I talked about my vacation attire is Tropical Brothers and Birddogs. So I go party up top, party down the bottom, right? And so before I left, though, I got a sample of the Animal Spirits Tropical Brothers collaboration. You're a little salty because you didn't get one for some reason.
I'm not salty.
I'm kidding. I would have been salty, but I got one, and we've been working on this for a little bit. And they gave us they put the design together. They used our logo and they put Animal Spirits on the side, and I was happier with it than I could have imagined. I called you on a Saturday. I FaceTimed you to show you, and I absolutely love it. And I think we worked out the details, and we're getting to the point where we're gonna be able to sell this thing pretty soon. Animal Spirits Tropical Brothers shirt. It's awesome. I love the design, the colors.
Did he bring it with you?
I'm not gonna wear it until I wear it on the show. I didn't want to, get it all wrinkled and stuff.
Okay. I like that.
Trust me, I got a full closet full of these things. So,
I have to say,
someone was asking us last week, so it's coming out soon.
We've been talking for 17 minutes, and we're only on page 4 of 35 of the doc. We got to get going.
Let's do it.
We're just
right.
moosey.
You said money market.
That's not a word.
You said money markets are the biggest story. Eric Belcher, I think you updated this chart of money markets like 6 times in the doc. So what does it say?
Wait, what's it? Wait.
So money markets have grown by $460 billion this year, 6 times what all ETFs combined have brought in. As a guy who likes to frequent in the flow data, that's a pretty good one, right? There's a ton of so here's the question. So there's some other flow data here, but here's my question: Is this, and this is a tease. So I thought about this one. Is this cash on the sidelines for a future market rally, or is this cash that's just sidelined, that's not coming back? Come on.
Now we're talking.
Get it? Cash that's on the sidelines, or cash sidelined? Like, is that if money market rates go from 4.5 back to 2, does that money come rushing back into the stock market at some point?
Nah.
You think that it's kind of there? You might be right.
Because that sort of money just doesn't. There's no velocity in that money. You know what I'm saying? That is slow money.
Yeah, the speed at which it happened, because those rates have been high for a while. Why did it take so long for people to realize? Like, did it really take a bank run for people to realize, like, oh, that's right, I can get some yield on my cash? Why did it take so long for people to realize this?
Look at this chart from Liz Ann Saunders. I don't know, Ben, the answer to the question. So I'll just move on. I don't know the answer to that.
Yeah.
Liz Ann Saunders tweeted, lots of focus on the fact that money market mutual funds assets have surged to new high, but as a percentage of S&P 500 market cap, the share is still below COVID bear market level. That's a really interesting chart. So she's got one line that shows the money market funds, another line showing money market funds as a percentage of S&P 500 market cap. And it's still below the 2020 highs, which I guess is saying that people aren't panic selling their stocks and going into money market funds. This is cash. These are deposits leaving the banks to go into money market funds. Very different story.
True. Okay. So yeah, that's true. So maybe you're right about the thing about this being sidelined cash as opposed to cash on the sidelines, because it's not like that bank money was waiting to come into the stock market either.
Exactly. Sticking with flows, which you're right, we haven't visited flows in a while. Again, from Eric Balchunas, equity ETFs took in a measly $27 billion in Q1, their lowest cash haul since COVID. Okay, so how about that, Ben? How about that? Because guess what did well in Q1? Stocks.
Yeah, true. So
thoughts?
Well, we talked about the fact that, like, it's flows over pros, but sometimes it's so it's not even the flows that lifted the stock market, right? So what was it?
I think it's people being offsides. I keep talking about positioning, but I really think it's people just being offsides.
Short cover and rally. Short cover and rally.
Yesterday, we got the ISM manufacturing number, which was not good. It was minus 2020. Like, if you take COVID crash out, it's the lowest it's been since 2009. And this is a data point that people look at and pay attention to. And yet the stock market continued its rally. The stock market has been continuing its rally. And so the market is cheering on bad news, anticipating a Fed pause, which is bad news for the real economy, but potentially bullish for stocks. This is what causes, or one of the primary drivers of wealth inequality, because we know who owns the stock market.
Yeah.
And so when you see the market rally on bad economic data, it just reinforces the division and the bad feelings that people already have. Another example of this, McDonald's is doing something with closing offices, and they're going to make a layoff announcement. Guess what the stock did yesterday? Rocketed to an all-time high.
Have you been inside a McDonald's lately? Like,
no.
Actually not just a drive-through?
I think a year ago or so. They've digitized.
So
right?
you get it on the screen, but the one I went to, like, they did away with all the pop machines. Like, you can't, like, fill it up yourself anymore. There was no ketchup. There was no napkins. You have to, like, get it from the front. I feel like they've just fast food these days is now, like, it's a drive-through business or a DoorDash business. Like, they don't want you to come in to sit at the restaurant anymore, which I guess makes sense because that's more overhead cost for them.
We spoke about the dollar earlier. Liz Saunders with another good chart. As U.S. dollar has moved lower from its peak, the performance for companies with higher percentage of domestic sales has lagged those with higher percentage of international sales, which we know to be true, right? When the dollar is weaker, international sales do better. And so stocks that are more exposed to international markets, I guess Apple would certainly be one of those. Maybe that's one of the reasons why some of these mega cap tech stocks have done better,
Oh, that's true because they have more overseas. I think tech is the highest percentage of overseas sales.
It is. So the dollar was a huge headwind on companies last year, and maybe we'll get a boost to EPS this year as that trade reverses. Okay. Be nice.
So Liz Ann Saunders just dominating the dock this week. So
she stepped it up this week, took over.
Corporate profit margins deteriorated to 13.9%, down from a peak of 17%, but still elevated relative to history. I'm sorry, they did not cause inflation, but corporations definitely took advantage. 17% they got to in the midst of the highest inflation we've had in 40 years, and corporate profits hit a record high. I'm sorry, they took advantage of this by raising prices to see how much pain people were willing to take.
Well, guess what? I'm pain no more. I'm putting an end to my pain because I hate to say this, but Starbucks has been causing me pain, Ben. I'm so glad you mentioned it. So let's see, just a straight up medium coffee, just a medium hot. You know how much this is? How much is this? $3.20.
What should it be? I'm not a coffee drinker.
That's actually, how about that? How about that? That's actually not even terrible. That's really not terrible. I mean, it's.
What should it be? What should a coffee cost? 50 cents?
Forget about that. All right. Now my gears are grinding. So my wife gets, she likes iced coffee. I'm a hot coffee guy. Her coffee, just a regular iced coffee, $4.30.
You know, if you just both stop drinking coffee, you could retire in like 5 years.
No, I know that meme is silly, but I think I'm done with Starbucks. Like, how about this? When I'm home, I'm going to Bags. When I'm home, I'm going to Bags. If I'm out, I'll get a Starbucks. But it's ridiculous. $4.30 for a regular iced coffee?
Do you not make your own coffee at home ever?
I do here and there. No, okay. I buy Bags. But I think I'm done with Starbucks. They took advantage.
Maybe other people are too. This is from the BLS. Americans saved 4.6% of after-tax income in February, up from 4.4% in January. I think it got as low as 3 something. Savings rate is going back up. Remember, that was the thing that everyone's depleting their savings. Now we're looking for a little bottoming process here. That's good, right? Good news. People are saving again.
Interesting.
That's kind of surprising, right? So I was going to get into the vacation stuff a little bit. No, here. Do this next thing, and then after the Vegas one, I'll talk about vacation stuff.
Okay. So we got a few questions asking us about de-dollarization. We are definitely not macro experts by any stretch of the imagination.
De-dollarization as in like the dollar is not going to be the global reserve currency anymore?
This guy.
What's de-dollarization?
It's been in the news. People are talking about it.
Explain it to me.
The dollar is going to lose its reserve currency status.
That's what I just said.
Yeah. That's what people are talking about. So Bob Elliott, you should follow him. His handle is at Bob E Unlimited. He does great macro, but credit to him because most of the macro or a lot of the macro's scary. The world is a scary place. And so it's hard to be bullish if you do macro.
There are very few macro people who are ever bullish. That's a good, or sound bullish.
I'm not saying that Bob, I'm not putting bearish or bullish thoughts in his mouth. All I'm saying is that he's not gloom and doom, and it's a breath of fresh air. He does great work. All right, so he tweeted, for all the speculation on the RMB, which is the renminbi, did I pronounce that right?
Close.
Let's go with that.
75% of the way there.
Replacing the USD as a destination for savings, it sure doesn't look like the reality. Foreigners have been aggressively selling RMB bonds since the start of 2022. And recent reserve data indicates RMB was the only FX actively sold in 2022. So he's got a chart of foreign holdings of Chinese bonds. And so he has a whole thread and he concludes with, the next time you hear the talk that the RMB is going to be the next replacement for the dollar, think about this past year. This was an important stress test for the dollar relative to the RMB. The RMB failed. I don't think, in terms of the long list of things to potentially worry about in life and investing, please do not let this be one of them.
There are so many advantages that the U.S. has over other places. And the biggest thing is, there's no other substitute that you look at and you go, that makes sense that would take over the dollar. Think about all of the big technological revolutions. China has basically stole all of our technology from us. Think about it. All the great technology has happened. The social media networks that they had to kind of steal. The AI invention is happening here. Everything is happening in the United States, right? I just don't see a good competitor that's going to come in and replace the dollar anytime soon. And even if, honestly, even if it happens,
Have you heard of something called Bitcoin?
everything's going to be tokenized. That's all right. Nevada casinos won $1.2 billion in February, a new record for the month. Las Vegas strip properties won $712 million of that, 19% more than last February. People want to go out and vacation so much and experience stuff. They're just giving money away to Vegas, I guess.
I view that differently. You're paying for entertainment.
Yeah. Oh, trust me. I get it.
Okay.
So on what's the Guy Raz podcast? How I Built This a number of years ago. I still remember this. Stuart Butterfield, who is the founder of Slack, and I guess he also founded Flickr before that. Is he still working with Salesforce, or did he kind of go away as Salesforce?
I haven't seen his. I don't know. I haven't seen his name in the news lately.
Guy Raz on that. I haven't listened to that show in a while, but he always asks people basically like, "Do you think you were lucky to get this place, or was it hard work?" And then he always asks them like, "What's it like to make a life-changing amount of money?" Because this guy made a ton. I don't know if he's a billionaire, but he made a ton of money on Slack. And he said, after a certain point, wealth can only give you so much. And he said, I look at it as 3 levels of wealth. So he said, level 1, I'm not stressed out about debt. Level 2, I don't care about what stuff costs in restaurants. And level 3, I don't care what a vacation costs.
This is very good.
It's great. But my thinking, you and I have talked about the vacation stuff a lot lately, how packed Disney is and how packed planes are. And I'm on spring break right now, and it's same thing. Is everyone just rich now then, since everyone can go on a vacation? Because
credit card points.
So I don't.
Did you use points? You must have for the trip for the flights.
Oh yeah, I got a new credit card, and yes. I mean, here's the thing: everything feels more expensive. Flights are more expensive, car rentals are more expensive, hotels, Airbnbs are more expensive, restaurants are more expensive, drinks are more expensive. But the thing is, being on vacation, you get it. You get why people would want to do this, right? It's going out and getting out and doing stuff is amazing. But I think the trade-off is like, if you want to go have those experiences and pay a lot on vacation, unless you're like insanely rich, then you can't have the $1,000 car payment, and you can't have like the wonderful house that has a 7% mortgage on it, and you can't go to fine dining. And I think that's like the rub for a lot of people. Like if you're going into debt to go on those vacations and you're not saving elsewhere, that's the problem. There have to be trade-offs somewhere, unless you're just a really wealthy person.
Mm-hmm.
Because, and I think that's what like gets like, we always talk about spend shaming, and like if part of your like rich life is going on vacations and having experiences, I think you should do that. But then you can't have everything else if you're not able to save and put money aside, and you can't complain everything is so expensive if all you're doing is spending money on expensive stuff. Like you can't have everything. I think that's the point, right? You have to be like selectively cheap about certain things if you want to spend money in some other area that's expensive. Correct?
Well, I was not battling. I was thinking about this with my car payments, which we'll get to later on in the show. But you're absolutely right. You can't have it all.
Yeah. Anyway, that's kind of the point. Like, I understand why so many people are going on vacation. Like, going on vacation is amazing, but it's also really expensive. And if you don't have the rest of your financial life in order, it can turn into like a stressful thing down the line. One other vacation thing. So we go to get ice cream with the kids, of course, on vacation. That's a thing people do, long lines. Why is there not a place that serves ice cream and then frozen drinks for the parents? Like ice cream is okay. I think I've mentioned this before. You know what my ice cream order is, right? If I go out and get an ice cream?
No.
I'm a diversified investor. What do you think it is?
Swirl.
Yeah, swirl. I like the twist. 50-50, right down the middle. That's, I'm a diversified investor. But how am I not able to get a Miami Vice while the kids are eating ice cream? There should be an ice cream parlor that has a bar in it as well, right? Kids get ice cream, parents get drinks. What could possibly go wrong?
Let's do it.
All right. That's all I got.
Twice in 2 days this week, Ben, or on the weekend, people asked me if I was a cop.
They seen if you're a narc? What? Why?
I've been called a gym teacher more than once. One time was with you. Remember at the Comedy Store?
Yeah.
Not the Comedy Store.
If you're a high school gym teacher, that's right.
One time was at the Audi dealership, and the other time I was getting blood drawn, which I hate.
I'm not a big fan of needles either.
I don't even care the needle. I don't know why. I was sweaty and nervous. I don't like it.
Oh, I don't get that bad, but I never, going into finance and working with numbers and spreadsheets and stuff is fine with me, but I could never work in a hospital. I would not be able to do it.
Robin's watching, there's a show on Netflix, like New York City Emergency, and she is completely immune. She likes Dr. Pimple Popper and all that gross shit.
Oh.
I can't watch, it's just, I can't watch any of it.
Yeah, no thanks.
I'm like, turn this off now. I cannot listen to it or see it.
Yeah, but you watch the gory stuff on horror movies.
That's different.
Okay. See, I can't watch like gory stuff in movies either. Okay, what's the Michael Burry thing? He retracted his sell statement?
So Michael Burry, everyone knows who he is. He tweets all the time and he always deletes them. So he never has any, there's never a feed. But I guess sometimes he just tweets sell, just one word sell. And then on March 30th, he said I was wrong to say sell. I don't know.
Doesn't it kind of feel like the people who became heroes in 2008 and had movies made about them and books written about them, aren't they kind of like child actors in a way, where like the people in finance shouldn't be that famous or that well known? And was it Damon or Affleck on Bill Simmons a couple weeks ago said, like, you stop maturing as a person or growing as a person when you become famous. I'm not saying like Michael Burry is like that, but I do feel like it was probably not the greatest thing for a lot of people who became famous from that.
Mm-hmm.
And that's why I'm never going to call a bubble in my life, because it's just not worth it.
All right. You want to tell me the soft landing back on or what? What is this?
All right. Core PCE and inflation. This is from FedWoj. 4.6% over the previous 12 months, 4.9% over 3 months, and 4.5% over the previous 6 months annualized. I don't know. It's coming down, right? I feel like if we get into the range, and I know they say they want 2% exactly or whatever, but aren't we pretty?
I think the narrative right now, which has changed 14 times this year, is yes, inflation is still trending in the right direction, but now there's going to be a recession. So
okay, so Allison Schrager, kind of her latest Substack said, okay, great. What if we have a mild recession? And it's pretty mild, and it doesn't bring inflation where the Fed wants it. And I guess I never thought about it that way, but it kind of makes sense. If the economy is this strong and the labor market is this strong and it's not really bending to the Fed's will, what if it happens and we do get like a very minor recession and inflation just goes to 3%? And the Fed says, that's not enough, or 4% or whatever it is, and the Fed cuts rates because they're worried about the recession, and then inflation takes off again. It's not out of the realm of possibilities, right?
I don't think I hadn't thought about that, but you're right. Could happen. By the way, you mentioned FedWoj. We got an email. You guys keep talking about FedWoj. We're talking about Nick Timiraos from the Wall Street Journal. He's the Fed whisperer.
Yes.
All right. Layoffs. Again, Bob Elliott showing up. Okay. He tweeted, layoff announcements are running pretty stable in the 50K range for the last 6 months, except for the big number in January. Also highlight some of the oddity of looking at these. Accenture said they would downsize over the next 18 months. Is included in here, even though it's not immediate. So it looks like layoffs are fairly steady.
It's a lot of tech stocks, right?
Oh, it looks like all tech
companies.
All right, McDonald's, we already spoke about. Oh, I don't want, this is early. This is just speculation, but Ben, what if Carl Quintanilla tweeted for the Bank of America tech desk? They pulled a quote, a Jeff Bezos quote from 2016, and then they said, quote, I believe he can come back to Amazon in a prominent role for one reason: to ensure not just AI participation, but AI leadership. Feels like an important fork in the road is upon us.
Okay. Maybe they can, because does it surprise you with like how well the AI rollout has gone for ChatGPT that like Siri and Alexa are just kind of awful sometimes still?
Well, a lot of things aren't great. By the way, credit to me. It's early.
For what?
What do you mean for what? Jeff Bezos coming back to Amazon.
Oh.
Or credit to us.
Credit to you for stealing my take.
It was a mutual take.
Okay, yeah. You got me. Yeah. That'd be great.
Okay, so I think we might have spoken about this. So I've tried multiple services to like track spending. And Excel. I know you use Excel. It doesn't make any sense to me. But a lot of the categories are either uncategorized or categorized incorrectly. So I've been using this thing called Rocket Dollar, And I think I spoke about it. They send you like emails if you have a large transaction, if something gets refunded. I don't even pay for it. I use the free service.
25% of all your spending goes to Instagram t-shirts.
But they categorize like my daycare as, I think, travel or something. Here's what AI is going to do. I know this is a minor problem.
You're saying AI is going to be a good budgeting tool.
AI is going to completely make sure that all of your spending is categorized so that you don't have to go in there and fix it. There are some tools where you have to like train the model on all of your line item things and then it could like learn it. AI is going to completely fix that. It's going to like instantly give you all your spending.
You know the easiest way to track your spending? Just put it all on one credit card. Like
is that what you do?
I basically spend everything on my credit card. There's occasionally, a check for something like the mortgage payment or something, but everything else is just, it's on a credit card. And that, for me, that's the easiest way to track stuff.
Yeah. But I have multiple credit cards. I feel like a lot of people do.
True.
Wall Street bonuses fall by the most since 2008. The average bonus was $176,000 last year, down 26% from 2021. I don't think $176,000 for a bonus is a lot of money. Just kidding. Just kidding.
Not in New York City. We have to.
Not in New York City. I'm only teasing. But I did say that I don't think 4,000 square feet is a mansion. Here's more context of what I was talking about there, because I think this is very important. And I don't know what the doc said, Ben. You could pull it up. But this is go ahead, Ben.
Okay, it says this was on our from the compound. We had over 3,000 votes. Is 4,000 square feet a mansion? 54% said no. 46% said yes.
Okay, what was the square feet that we said?
4,000. I think when we Googled it, didn't it say 5,000 is considered a mansion?
And that's what it said. So there are, in my town, I'm sure I know there are homes that are more than 4,000 square feet. I don't know how many there are. Probably, I don't know, 20. I mean, it's not a ton of them. But the thing is, in my town, the houses are right on top of each other. So I'm looking out my window. My neighbor's house is literally 13 feet away. Another factor to consider in whether or not something is a mansion is property.
No, that's true.
So even if
half an acre,
yeah. So like even if a house in my town is 4,000 or 5,000 square feet, now the 5,000 square feet is huge, but nevertheless, there's no property. So I think that's a big factor.
True. The other thing is like, do you count mudrooms as part of your square footage or not?
Because actually, we got an email today from somebody thanking me for the nudge on the mudroom. I gave them permission, mental permission, or something like that.
There you go.
We did get a lot
cut back somewhere else then.
Moving on to real estate, or stick with real estate, I should say. The Restoration Hardware CEO, which is always a color for a conference call, he said, quote, "I've never seen a luxury home market down 45% a quarter ever, not even in 2008 and 2009. So I think we're near the bottom. But could it get a little worse? I think it could." All right, Ben.
That guy's like a macro guy a little bit. He always has macro takes, right?
Well, because he's in house. I mean, he's sort of at the epicenter of it. Imagine if.
Have you ever shopped at a Restoration Hardware before? It's expensive. I guess he did say it's luxury.
Okay, he said, "I think we're near the bottom." It's kind of nuts that the housing market went through this period of time. The high end got obliterated. Sales basically stalled. And yet the economy didn't fall apart. I know there's obviously challenges, in certain areas, but
true. We've
housing got destroyed.
The housing market, if you add it all together, construction and furniture, all the ancillary stuff that goes with this, 20% of GDP. It's a huge part of the economy. It is kind of crazy because it has just ground to a halt in a lot of ways.
There's a great chart from Bank of America. Weekly home improvement retail spending growth year over year, according to Bank of America credit card and debit card data. Crashing is the wrong word, but certainly heading down like a lot. It's down 10% year over year. And then there's another chart showing just weekly housing related services spending.
Well,
this is even worse.
I'm guessing so much of it was pulled forward. And also the home equity line of credits, it's now 7 or 8% to borrow from your home equity line of credit. So I'm guessing a lot of that has fallen by the wayside.
I'm kind of surprised. Home Depot and Lowe's are like, they're hanging in there. I mean, the stocks don't look great, but they're not like getting demolished.
I still think that the renovation thing has legs for people like longer term. I don't know what it means short term, but longer term, people staying in their homes and being like, let's add another bedroom on the back of the house. If you have acreage. Now, if you live in Michael's neighborhood, maybe you don't have acreage. If you have some room,
So the plots here are 60 by 100. So I don't know what that means, but
Yeah,
what does that look like?
that's right. In the Midwest, we have more room, but they're building houses now anywhere they can find open land. Like there's not many like lots left. The lots are bigger in Michigan, but they're putting homes anywhere they can. I feel like people want to build these days.
All right, this is interesting. I don't know where George Papadopoulos got this chart from, but it's the median down payment for U.S. home buyers. And the median home buyer, according to this chart, is only putting down 10%, which I guess made sense in 2021 when rates were low and prices were high. But now that rates are so high, I
Yeah,
guess the problem is prices haven't budged.
people can't afford it. That's a problem. I think
But how do
Americans.
you? But I'm saying, like, if you're borrowing 90% of the money,
Yeah,
that's gotta kill you on the monthly payment.
yeah, but otherwise you have to save for a lot longer to get that down payment. I think my first home I did a 5% down payment. I get it. It's hard to, especially if it's your first home. All right. We talked about money markets before. This is a survey from Bankrate. 22% of those with a savings account earning 3% or more, while 24% are earning less than 1%. 16% are earning nothing. I guess this is the money that's going into money market funds. So basically 40% earning less than 1% still to this day. I guess that's a lot of those SVB people who are earning nothing. This isn't like checking accounts. This is savings accounts. It's kind of shocking. Do you think a lot of people just don't pay attention to this stuff in inertia? And I thought rates were still zero. Like, what is the cause of this?
I don't know. I think it's just lack of financial literacy.
I guess it's surprising though. I think you might be right. Unfortunately, that people just they assume like I get what I get and there's no other choice. It's hard to believe. So you put this credit card thing in here. Credit card interest rates are the highest in history. What are we at? 19%? That's tough. If you are putting a vacation on a credit card and not paying it off, that's tough. Look at that. How high that went.
How much money do banks make from credit card interest? I assume it's a non-trivial number.
Well, how much of it does also get written off though for people who don't pay, right? Because it's unsecured debt. I don't know. Good question. All right, you saw this Ivy League parents thing from Bloomberg. You talked about
I saw the headline. What's the story here?
College consultants charging as much as $750,000 to build applications that starting in 7th grade. They interviewed this mom who talked about it and said her son applied to 22 schools and already has a spot at Yale. She said, "We are fortunate that price is no object. Prestige carries a lot of weight, and we want him to attend the best colleges." So they've been working at this place, and they said they charge as much as $750,000 to work with students starting in 7th grade, and as much as $500,000 starting in 9th grade. The guy who runs this company estimates clients spend over $1 million to prepare their kids to get into an Ivy League school. And then they show the acceptance rates for Harvard and Columbia and UPenn and Yale, and they're all like 3 or 4%. Dartmouth is the highest at 6. I'm sorry, but reading this is like a wealth inequality thing, but also I know they added some sort of tax above $1 billion. I think we need
These
to start.
parents are insane. I'm
They are,
sorry. Listen,
yes.
I know that I don't have a child who's college aged, and I'm sure that I will do whatever I can within reason to help my child be prepared for to be in the best possible position to succeed. That's not what this is. This is insane.
It's ludicrous, right? That you're buying your way in, and it's also, if you knew your parents were doing this, maybe the kids do. I'd say, give me the $750,000. I'll start my own business or travel the world or something. And go to state school.
This is such a small. This is not. I mean, this is such a small number of people we're talking about. It's not even worth talking about.
But the fact that these schools let in 3% of applicants, isn't it time we just start saying we're going to tax your endowment more or tax the whole thing if you don't start letting more people in? Like, why do these? I think the tax is like over $1 billion, and it's like a small amount for the tax. Why do these places get tax exempt status if they're like this? If it's just a place for really rich people to go, I don't understand why they still deserve the tax exempt status. I think it's ridiculous that they have these endowments that have tax breaks still.
Yeah. All right. I want to skip this Lulu thing.
Okay. Oh, okay. We're going to go random stuff. We got a lot of so for Talk Your Book this week, we talked commercial real estate with the USQ fund, and we discussed that there was a meme, Winnie the Pooh meme, and I said apartments for the regular Winnie the Pooh, multifamily housing for Winnie the Pooh in a tux. And you said, no, that's not multifamily housing. A lot of people in commercial real estate said, au contraire, actually, apartments are part of multifamily housing.
Okay.
So
I stand corrected.
we didn't know, but yeah, now you know, multifamily housing.
All right. I also got a lot of emails on StubHub just sucking so much. There's a site called TickPick where I'm looking at like, so for the Knicks,
Careful on
for
the
example.
Google for that one.
Why?
TickPick? Just careful if you misspell. Anyway.
Oh, bad. What I like is you could buy a ticket, and when you're buying something, it gives you, it says like all in or something. Yeah, it gives you the price all in. So it gives you the everything's in one. That's all I want.
So you don't have the 17 extra fees after the fact.
Don't charge me a $25 servicing fee. Just show me what the price is. You're like, this is a good price. Actually, no, it's not, because it costs you 30% more than what you're seeing. So I hope TickPick disrupts StubHub. I'm sick of them. All right, we'll move quickly on this because we're running a little bit long. But this is interesting. There's a something that I never thought about. There was an article in the Wall Street Journal. The TLDR is there's way too many parking lots, and it's causing massive inefficiencies and driving up the price of rent. So here are some data points I pulled out. There's an estimated 700 million to 2 billion spaces in the US, which equates to between 2.5, I know it's a wide range of estimates, that equates to between 2.5 to 7 spots for every registered vehicle. In Los Angeles, for example, parking covers about 14% of the land area. There's one data point where it says a garage adds about 17% to the average rent. Almost 3/4 of carless renters have a parking spot included in their rent, and they collectively paid $440 million a year for parking that they don't need.
Jeez.
So somebody who studies this stuff said eliminating parking requirements can have this huge impact on the quality of life and sustainability of a community. It is among the most significant changes that a local government can make. So to that end, Buffalo eliminated minimum parking requirements, and the city's population grew for the first time since the 1950 census.
Wow.
And if you look there's some great charts in here showing the average number of parking spaces per new U.S. residential unit and the average number of parking spaces per 1,000 square feet of a new U.S. office construction. And they're way, way, way down.
It's pretty cool. Do you think that's because of parking spots or Josh Allen fans? But this is one of the things that, like, the appeal of driverless cars could be someday is that you have your car drop you off somewhere and the car can drive off site somewhere to park itself or whatever, right? Isn't that the dream?
Yes.
Is that dream gone completely? Remember, like 10 years ago, we were like 3 years away from driverless cars, people were saying, and it feels like we've made no progress there. Kind of?
Not true. Not
You
true.
don't think so?
So I'll get to this in a second. Just put a pin in this.
Okay.
So there's so we got some auto numbers this week. As dealerships get more stock, automakers' sales rebound in the first quarter. Car buyers are finally starting to see something they haven't in a long time on dealership lots, more availability of cars and trucks, which is great for all of us, but it's terrible for me. So when my wife's transmission blew out, they gave her an A5, which is like the sedan. And if you start to drift from one lane to the next, it pulls you back in. It's pretty cool.
Okay, yeah, I've seen that, but that's pretty. I think my wife's car, my wife's Hyundai has that, but anyway. I wanted us to be further along at this point. That's all I'm saying.
So we got a lot of. Oh, this made me laugh. We got a lot of emails about like people being pro Tahoe. We got a few pro Kia Tellurides. Got a bunch of people saying that that's great value. So somebody sent us a long email about like being pro Tahoe and then said, if you're using a car to commute, you should punt the Jeep and go buy a used Tesla 3. Cut gas bill to zero and you can get them for $30K or so. Just don't talk about owning a Tesla because other people will want to kill you. I own one and try to never talk about it. I hate those people.
Okay,
that made me laugh. All right, so here's an update on my situation. If you missed this, I spoke about my leasing situation with car dealership guy on Saturday, which was an awesome episode. So it turns out, Ben, so my thought was that I was going to go from my wife's Q7 down to a Q5, save money there, use some of that savings to upgrade from a Jeep to a Tahoe. None of that is happening. Why? I'm underwater on the Audi by $12,000. So
what does that mean?
Thanks. So when I bought it, it was no good options. Thanks, Jerome Powell, or COVID, I guess too. When I bought it, I could either increase my rent at the time by like $500 a month or just buy the car for what I thought was a fair price. So I bought the car and now I owe 40. I owe 40. The car is worth 28. So in order to get out of the Q7, I went to a dealership.
You're like someone in 2007 with a house.
Listen,
like
literally.
House.
So in order to get out of the Q7 and go into the Q5, I would have to put down $6,000 and pay another $100 to $150 a month in rent. So why would I do that? Why would I pay $6,000 plus another $2,000 a year or so to get a smaller car only so that I can pay $700 more in my Jeep? Because the Tahoe, even with my positive equity in the Jeep, I have like positive equity in the Jeep. So that would get rid of the down payment for the Tahoe, but it would still be like $1,150 a month.
So you bottom ticked Facebook and top ticked the car market.
I top ticked the car market. So I think the deal is that I'm kind of stuck. Now, I do want a Tahoe, but not that bad. It's like a legitimately like $7,000 or $8,000 more a year, really for no reason. And if I have the Q7, then I don't need a Tahoe. So anyway, I'm stuck is the bottom line. I have no flexibility.
Good thing you got that warranty to fix the transmission.
All right. You want to wrap this up?
Yeah.
Go ahead. What do you got?
I don't have a lot of recommendations because I'm on vacation here, but I tried to watch a movie on the way down, A Man Called Otto with Tom Hanks. I don't know, man. Has Tom Hanks had a good movie since Castaway? I watched.
Stop it! He has to.
I mean, he's had decent movies. He hasn't had a great movie. This movie was about a guy who lost his wife, and he's kind of a curmudgeon, and it was okay. I honestly couldn't. I watched half of it on the plane, and I'm like, I'll watch the other half on the way home, and I'm like, I don't think I will. It didn't draw me. I love Tom Hanks.
Oh wow, you're right. These are his last movies, and stop me when I get to a good one. A Man Called Otto, Pinocchio, Elvis, Finch, News of the World, Grey House, A Beautiful Day in the Neighborhood. Oh, that was supposed to be good.
Yeah.
Toy Story 4, The Post, The Circle, Inferno, Sully, A Hologram for the King, Ithaca, Bridge of Spies. That's 2015. That was decent. His last good movie is 2013, Captain Phillips. You're right. It's been a decade.
I love Tom Hanks, but
his last 40 movies are terrible.
Yeah, that's all I got for recommendations.
All right. So some news dropped over actually yesterday. Here's what's coming on. Warner Brothers, I think, is working on a Harry Potter show.
Okay, my daughter is reading those books right now. She loves them. So that's
amazing. Heat 2, did you see that? They're working on Heat 2, I think.
Yeah, I'm usually anti-remaking, but I'm reading the book Heat 2, actually. So it's like a prequel and a sequel together.
Oh, like The Godfather Part 2?
Michael Mann wrote the book. I think that's what it's about, is like the prequel sequel kind of thing.
And they're making a live-action Moana.
Oh, that makes sense.
Which your kids must be stoked for.
I think that might be the best Disney soundtrack of the last 10 or 15 years.
It was good. All right, I got an email. This is from the guy who recommended Brawl in Cell Block 99 and Bone Tomahawk, so you know he's reputable. I watched Infinity Pool after you mentioned it on the pod the other day. I thought it was fantastic. Nightmarish and dreadful and deserving of a rewatch so I could follow it a little better. See, this guy gets it. Did you see his other film, Possessor? Thought it was great too. Did I? Loved Possessor. I have one for you. You can't watch it with your wife or around or even let her know you're watching it because she'll wonder what the hell is wrong with you. Believe me, that's what it always is. A friend recommended it a long time ago, and for the first 45 minutes, I kept telling myself, why the hell are you watching this? But if you keep watching, I promise it pays off. Martyrs, check it out. I did check out Martyrs. I didn't like it.
How do they still have enough names left for horror movies? How have they not gone through all the names yet?
But Martyrs was definitely demented. I don't know, it's old. And then he said, Speak No Evil was also really good, but tough to watch if you have kids. Yes, Speak No Evil was the most horrendous I felt after watching a movie. Sean Fennessy was pounding the table on that. It was, it hurt to watch. Absolutely hurt to watch. All right, last one. Not a recommendation. So I guess I have no recommendations for the week. I watched Jurassic World Dominion with Kobe.
That's the last one, right?
Yeah. And you remember my scalding take of how terrible that movie was?
Yeah, it was not good.
So Robin was like walking in and out. She goes, what's happening? I feel like there's like a million different storylines. I said, right? This is the worst movie ever. It was worse the second time. Just horrendous.
Yeah. The Jurassic Park sequels, they never nailed a sequel. Just the two original ones. The original first one and then the reboot was good.
I did like Jurassic World. And I even liked Fallen Kingdom, but the third one was terrible.
Okay.
All right, Ben, you're a hero. You potted even on vacation.
Okay. It's lunchtime here. I'm going to have a Miami Vice.
There you go.
Wish me well.
Enjoy. Bye.
Bye.